and I was remembering how archaic the system was for people to send money. This is an amazing collateral instrument. Why would you want to go to a bank and send money using a SWIFT system and be slow when it looks like using this product you can send it in minutes?
Was this a key for you to open your eyes to the stablecoins? What was the turning point for you?
Previous to that, when the administration changed in the US from the Trump pro-crypto administration, the training wheels came off. Everyone was very, very suddenly positive about crypto. But from what I am seeing, I'm seeing that the banks certainly are starting to think about a stablecoin strategy or a digital money strategy.
Great to have you, Ramy. Thanks for joining me. I really, really appreciate it.
Oh, my pleasure.
What I want to start with maybe is your impressive career. Okay, so you have more than 20 years experience, maybe starting in banking. Banks like Citi and IG, right?
My history has been, a combination of banks and brokers.
Ah.
And so this is, my career started in 2000, 2001, maybe 25 years ago. And I started in brokerage, actually. So equities brokerage, this kind of thing. IG was a trading house. So people would trade on leverage and FX and indices and equities. And then I was there for 5 years. I moved to Citibank in 2010 in the foreign exchange department. And we were offering foreign exchange liquidity to brokers, actually. So it was servicing brokers, giving the Forex brokers in the UAE and Cyprus and Turkey in this time, giving them FX liquidity. So it was very competitive, understanding the pricing and so on.
My question is mainly because, and this is a trend that I have seen even in the previous. I had an episode with our dear friend Nick, and I will put a link to it because it's also discussing stablecoins. I always find people who are shifting towards the crypto space, and I don't want to call it crypto because crypto is a very broad term, but let's say stablecoin. They usually have an experience in banking in some sort, shape, or form, right? And so for me, I want to understand, was this a key for you to open your mind, open your eyes to the stablecoins? And what was the trigger for you to think, okay, no, I think this is a very good alternative solution, and I think this has a very good practical use case. What was the turning point for you?
So in my journey, having had the experience at a bank and understanding payments. So I was offering liquidity to brokers. Lots of people needed to send me money quickly on margin calls and so on, collateral to trade their funds. And I was remembering how archaic the system was for people to send money. So the MT103, the MT202. I remember calling brokers on a Friday saying, you're on margin call, you need to send me $1 million, I need it to value date today. You know this. So yeah, of course, I'll get it. You get an email with a scan of the SWIFT message, and you think, it's the wrong value date, and then I'm taking weekend credit risk for this guy's position because you don't want to close him out. So I remember back from those days, this is 2010 all the way to 2015, thinking there must be a more efficient way for someone to send me collateral, to send money. Why does it take a day? Why am I beholden to the holiday of a bank or beholden to the slowness of the guy at the correspondent bank in this country to send me money? So this stayed with me. And then when I went back into brokerage, I worked I set up my own broker for a period of time. And then I moved to the GMO Internet Group, massive Japanese conglomerate. And they were the largest Forex broker in the world. They have GMO Click Securities. It does about $1 trillion of volume every month. So this was a very interesting business, very high volume. And again, understood the way that it was working. But I realized also within COVID time, 2021, that they had a crypto division.
Before you joined?
Before I joined, they had it already. So they had a I joined them in 2019. I set up an agency FX business, so traditional FX business in 2019 for them. Then COVID happened. And, COVID, everything slowed down a little bit. It was a difficult time. So I was looking at what else does GMO do. And I found out that we have a stablecoin business. It was on the town hall in 2021. I remember it very vividly. And this guy in New York, a Japanese guy called Ken Nakamura, I was like, what is he doing? This is a really interesting business. What is a stablecoin? And I was starting to look into crypto. I knew about Bitcoin and so on. And then I found out more. And I talked to him and his sales guy in New York. I said, what is a stablecoin? What can we help? Sounds like FX. Can I be useful?
It was the first time for
This was first time really for me to understand what it was in 2021, really. And I knew about it, but not heavily. I knew. And then immediately for me, I thought, this is an amazing payment instrument. This is a very good collateral instrument. Why would you want to go to a bank and send money using a SWIFT system and be slow when it looks like using this product, you can send it in minutes? This is mind-blowing. Okay, great. So alhamdulillah, like in 2022, they asked me, do you want to work for this company in GMO instead of the FX business? And I was thinking, actually, yes, I would. For me, I'm really excited about new technologies. I could see that I didn't understand it fully, the capabilities of it, but I could already see this is the future. This is the future. So yeah, of course, they said, come and work in New York. I said, I live in London. I'll travel to New York every but I joined them in 2022, the month of Terra Luna.
So did this shake your thoughts or your belief in stable coins, the Terra Luna collapse?
No, but it showed me how immature the space was. It was super immature and very crypto oriented. So, and this is why I helped to set up these industry bodies and so on, because there was no union, no real way for the industry, the actors, to know what is good practice. How do we talk to regulators properly? How do we make sure that there's standards around the actual stablecoins that are issued? How do we do these things? How do we do it if we don't talk to each other? We don't know no one knows anyone. It was only Tether and Circle and a couple of others at the time. So no, for me it was eye-opening, because even that whole year of 2022, if you remember it, was Annus Horribilis. The whole year was terrible. Terra Luna, Celsius, Genesis, you name it. Things were collapsing in crypto, and even the ones that were pretending to be good actors were actually themselves bad actors. So culminating with FTX. So the credibility of the crypto industry, not just the stablecoin product, was poor in this year. And I would also say we have short memories in crypto. Stablecoins were not really the respected form of digital money until recently. People in 2022 were talking about CBDCs. People in 2022 were really preferring tokenized deposits. Other forms of digital money were preferred to stablecoins, because the only stablecoin issuers were these private companies that were crypto-centric, that did not understand how to interact with the real world. So, would a treasurer suddenly deal with a product that he doesn't know anything about, with the technology that he's very unfamiliar with? No, it's not easy for him to do that.
This is what I want to be the core of our discussion today. How can we as treasurers accept stable coins as part of our day-to-day operation?
Yes.
The same way we accept banking networks, the same way we accept SWIFT. I believe it's a long way, but I know that you have started multiple foundations, or not foundation, associations and companies to try and make this easier and more appealing and more easier to understand for treasurers and corporates, starting with the stablecoin standard, right? And then now with the Middle East Stablecoin Association. So let's try to answer this question. Where's the starting point? Where can we start to spread the appropriate knowledge, the know-how, and make it easier, simpler, safer for the treasurers and corporates and hopefully banks to use stablecoins?
Yeah, so the starting point really is around good understanding. And as a result of good understanding at the right level, you get good regulation that can help you build an ecosystem. So, the stablecoin issue that I work for, GMO Trust, we're regulated in New York and we have a charter, the trust charter. So it's like basically regulated as a bank, like a bank. So we have the same AML, KYC, KYB procedures. We have the same internal audit. We have the same capital adequacy requirements. We have the additional blockchain analytics, transaction monitoring, know your wallet, all this kind of stuff. So because of the regulation of New York is very strict, we are able to then show to customers who want to engage with our product that they will trust this money. If what we are proposing as stablecoins is trust my money. If it's quicker money, trust it. How do you trust it? You trust it because it's regulated, okay? And you can see the attestations and you can see how much is it backed 1-for-1, what is in the reserve composition, and the other criteria that you have. That's the first thing. Then it's like education to show, for me, how can a treasurer use it? So both of us were at the Association of Corporate Treasurers event this week in Dubai. Fascinating how different what a difference a year makes. So, but from last year when I was wandering around talking to corporate treasurers at, Etihad, Emirates, and, they're telling me, no, this is crypto, this stablecoin is crypto. Either it's haram or this is like gambling or no, don't want to engage in this. And it's like, well, no, it's just digital cash. Actually, it's different. It's different. To this year, there's a panel. There's a roundtable about the subject. The Association of Corporate Treasurers themselves is interested in it. And even recently, Emirates has an announcement to accept crypto. They have an arrangement with Crypto.com to accept crypto. So it's moved very, very quickly in this region particularly. This is why I'm very excited about being in this region, specifically why I moved from London to the Middle East. I feel like we're really at the intersection here of you've got great regulators. So ADGM, I want to call out ADGM as being very progressive. They had crypto regulation for many, many years, before I even knew about crypto mainly. They already had regulation in 2017, 2018. They have progressive stablecoin legislation. So, you can issue a yield-bearing stablecoin out of ADGM, for example. So that's very, very advanced thinking for them.
I want to go through the regulators in the UAE, but before we go through that, I want to first understand your mission when you established Middle East Stablecoin Association. What's the main mission? What's your core mission for this?
Sure. For me, the mission here is a different one to the global organization. At the time I set up the global organization in 2022, there was no union for stablecoins. Stablecoins was still a product that was not trusted. So the mission for me then is, can we have a shared voice for stablecoin issuers, and then that migrated to the stablecoin ecosystem. And alhamdulillah, it's moving in the right direction. We have good progress now. Here, the mandate is slightly different. Stablecoins are already established and known as a product. Now you have, and it's in a region where there's already regulation, actually forward-thinking regulation. But the problem I see coming from international and working in an international environment for this is that there isn't much harmonization between the regulators, specifically in the UAE, but maybe regionally as well. If we can be an association that can help the UAE specifically improve its attractiveness to be a place for people to issue stablecoins, to engage with stablecoins, you do it because people don't want to be confused. At the moment, there is federal regulation. There is a digital dirham. There is ADGM. There is VARA. There is a number of different regulators that all do stablecoin regulation in some way, shape, or form. But you're not sure necessarily as an international issuer, where do I go? Where do I need to be regulated? If I want to do it here, can I sell it here? If I sell it onshore, can I sell it offshore, and vice versa? And how many licenses? Do I need one or three?
And as a treasurer as well, I don't know who should I abide by. Is it this? Is
And
it
who
when
can
I'm
you use it with? Yeah,
exactly?
if you have a merchant who's ADGM or onshore, and another one that's offshore, and then another one that's onshore, is this product applicable? Can it be used as a good form of money? Is one of us breaking the rules? Which one? Are both of us breaking the rules? So there's a little bit of slight, I would say, over-regulation and not enough harmonization between the regulation. They've all set up with good intentions, but to service different audiences. But now I think we just need clarification. And I think for me, the Middle East Stablecoin Association is exactly the union and the organization to try and have that engagement, have roundtables with the regulators, have roundtables with all the regulators in the same room. That hasn't happened that often, from what I've heard. So if we can do this, that's a good mission.
Have we done that yet?
We're starting to. So we had a roundtable with ADGM, and at that roundtable there was someone from VARA in the audience, which is great. And I don't believe that they had talked to each other, so it's very nice to see. We're having a roundtable, I think, with VARA, and we will have another roundtable with CBUAE later in the year. So we're starting to get great regulatory engagement, and if we can start to bring the regulators together to just clarify some of the inconsistencies between the specific regulation and stablecoin, it'll be very good.
Treasury is changing fast. New risks, new regulations, and new opportunities. The ACT has been helping treasurers for over 50 years now, providing content, qualifications, and connections that will help you grow your skills, grow your connections, and grow in the profession. Become part of the community that gives you voice and help you shape the future of the profession. For more information, visit treasures.org now. Why do we have multiple regulators?
My understanding, and again, I'm new to this region than you are.
I know this might be a tricky question, and it's not a rehearsed question.
No, it's not a rehearsed question, but it's a good question. My understanding is that there's born out of a partly geographical moat. So Abu Dhabi with ADGM and Dubai with IFC and VAR and so on have a competitive element, shall we say, and want to attract the best businesses to their emirate. So I think there's a regional thing. I think at the national level, I think the central bank, of course, wants to have good control over money and money distribution, forms of money. So they have an element. But then there's also the onshore, offshore element here. So ADGM, DFC, these are offshore centers where people can actually trade globally. So they have their own rules, but that doesn't. But they're their own little ecosystem. I think what they haven't realized necessarily is stablecoin is a global form of money, and it can work within a country as well, offshore, onshore. So historically, you'd come to a DIFC because I want to be an international company, or you'd come to ADGM because I'm an international company. I want to service international companies and do it from here. I didn't have a thought process that I wanted to serve the regional community or the onshore community. With stablecoins, that's different. That's money. There's now money that we want that can be very easily used onshore, offshore. And that's why I think that you have, I'm not sure it answers the question exactly, but Yanni, this is where my understanding so far.
So let's, for everyone who's watching and thinking of coming to the region or want to have an understanding about who are the regulators, maybe let's name them one by one and just briefly say the difference in the role between each one. So I think there are four that we have, main four ones. So maybe let's just name them so that people know, because maybe people who haven't been to the UAE before don't necessarily know what's the IFC. Don't necessarily know what's ADGM. So
no, that makes sense. Maybe let's start at the top level, which is sort of the central bank. Central Bank of the UAE is the entity that governs money. It governs. It has the rules around domestic money within the whole of the UAE. So everything actually rolls up into the central bank. It has the control of the monetary policy and any kind of digital forms of money. So they have been, and I want to call them out as well in a good way, that Central Bank of UAE has been very progressive and very measured in their strategy around digital money. So they have had experiments with CBDCs going back many years. The Enbridge project is a really interesting example where they and a number of other central banks concentrated on wholesale money movement using CBDCs. So that was great. They also have now a plan to have a retail CBDC. My understanding is either the end of this year, beginning of next year.
We're going to discuss the CBDC, but just for whomever doesn't know what's a CBDC, so you can just
central bank digital currency.
Yeah,
Sorry,
because
yes, of course. So CBDC, central bank digital currency, and also the digital dirham as well. In terms of that's the CBDC, and also they regulate the dirham stablecoins. So stablecoins that are denominated in dirham. So this is what they have, and there are examples of live projects of dirham stablecoins live now. So AE Coin is a product that is a dirham stablecoin available for people to use right now. So
individuals and corporates.
Individual and corporates. Yeah, you can get a wallet. You can. I think they have signed agreements with Abu Dhabi Taxi, Air Arabia. There are some deals there. So you can, if you are an individual, you can interact with a dirham stablecoin right now, which is great. I mean, that's super progressive compared to many other regions.
So that's the first regulator.
That's the first. So that's
central
the
bank.
Central bank, and that deals with everything that happens in the country. Okay. Then you have the offshore centers. So these are their own regulatory, they have their own rules, their own regulatory climate. And there are two main ones. So there's DIFC, which is Dubai International Financial Center, and we have Abu Dhabi Global Market, ADGM. Both have the rules. Generally, both, ADGM definitely, I think also DIFC, based on common law. English law is basically the law that they have that governs this region, and they are able to set their own rules and regulations. So FSRA is the regulator in Abu Dhabi, and they have written a set of crypto regulation that covers crypto market infrastructure, VASPs, virtual asset service providers, and stablecoins. So they can regulate a number of different activities within their region. But these are, this is an offshore thing. If you have a license to have ADGM or DAFC, this is an offshore license. So your audience is international. They're not onshore Emiratis, local customers.
So does that mean that you're able to work both offshore and onshore, or only offshore?
My understanding is that it's only offshore. I think, that's the limitation there. So you can deal with other customers that are international, but you can't face and other people in the ADGM who are set up, but you can't face people
in the mainland.
In the mainland.
Okay. But if I want to work in the mainland?
If you want to work in the mainland, you're going to need to have a sort of domestic framework, and that takes you up to the CBUAE, as I understand.
To the central bank. Okay. And there is then VARA, I believe.
So VARA is the virtual asset regulatory authority. So it's Dubai based. My understanding is that it is an onshore. So it's for the onshore application, and it's specific to virtual assets. So again, stablecoin legislation or regulation is covered within this. And you can get a VARA license, and that will allow you to issue digital services as a VASP or a stablecoin issuer under that framework.
But it's mainly Dubai.
It's mainly Dubai, but it can be used, and this is the bit that we're trying to harmonize. If you have a VARA license, can you sell into ADGM? I don't know. Can you do offshore? These are the things that we need to clarify.
That's very interesting. So yeah, I mean, that's a very noble mission, if I might say, because you're trying to harmonize and connect all these different regulators. So just to summarize, we have 4 we have discussed. So we have 2 who are onshore. Mainly the bigger one is obviously the central bank. which also regulates the UAE digital currency, or the CBDC, the central bank digital currency. And we have another one onshore, which is VARA, but it's mainly operating in Dubai mainland. And then you have another two offshores. One is the IFC, which is offshore, but it's out of Dubai. And then the ADGM, which is an offshore, and it's out of Abu Dhabi.
Correct. I'll throw in one more, actually, which is ESCA. So the Emirates Securities Authority, which may be relevant too. So that governs stockbroking and equities and other securities. So to the extent that digital money can be treated as a security or touches securities, then potentially they can be relevant as well. I think there is a license that covers digital. They've said that they're going to be launching it. I think it's a Cat 7 license, but that's something that is also another regulatory authority that you need to be aware of.
Okay, now I have a controversial question, which I discussed with you before the episode. But before we go to that, because this is the exciting one, I want to end with this controversial question. But before that question, at this stage, how involved are the banks and how comfortable they are? And have you seen banks willing or are already adopting stablecoins into their system and framework?
So the answer is yes. And I think the answer is they've known about this for a long time, but now it's moving from the innovation department. I mean, let's preface this. Different banks move at different rates. JP Morgan and Citi is going to be different to other banks in different regions, and will have different timelines for doing this. But from what I am seeing that banks certainly are starting to think about a stablecoin strategy or a digital money strategy, and understanding how they can enable the technology to service their customers. So whether it's JP Morgan at the top international end of banking with the Connexus product, which is great, allowing for money movement between their customers, or Citibank has Citi Token Services, which again allows for borderless movement of money within their walled garden for their customers, 24/7 basis. These are great innovations. You have had some banks who are starting to do stablecoins as well, have stablecoin strategies. So internationally, back in the day, a few Australian banks set up an Australian stablecoin. You had Societe Generale had a SG Forge, a Euro stablecoin. Still, I think in the experimental stage, that still fits within the innovation department rather than really doing something. But locally, you've had announcements where there's going to be a dirham stablecoin issued by FAB in conjunction with IHC and a couple of other parties. So locally, people are looking at this and seeing how they can harness that technology.
So it's coming, but it's gradual because, we do. So I believe now we are at a point where, versus previously, where everyone was looking crypto, like what we said, this is haram, we're not going through that. But now, because of the mass adoption, if I might say, with the different products of the crypto, people are more intrigued, and companies and corporates and banks are more intrigued. So now we're at a point where we just want to make it a safe, compliant space for these corporates and banks to be able to come in, which is the mission that I think what we have at the moment.
Correct. But I think also we need to be cognizant of the immense progress that has happened over the last 12 months. And I'd say we said ground zero is regulation. We've had regulation in a number of different countries, but we haven't had clarity around federal regulation in the US. So I say that as a state-regulated thing. So we had state regulation for a number of years around stablecoins, but we haven't had federal regulation. When the Genius Act came in, actually previous to that, when the administration changed in the US from a anti-crypto administration to a Trump pro-crypto administration, the training wheels came off. Everyone was very, very suddenly positive about crypto. And crucially, banks are heavily regulated places, and for the benefit of their customers, they need to go in a prudent manner. They won't do anything unless there is serious regulatory clarity, and regulatory clarity that comes from the biggest market, which is the US. So once the Genius Act passed a few months ago, this for me is a massive moment that signaled that banks can start to look at this without being penalized.
For the people who don't know, just elaborate more on the Genius Act.
Yeah, so the Genius Act, I can't remember what it's an acronym. I don't know what it stands for, but it's effectively stablecoin legislation. And it formalizes the requirements that you need to be a stablecoin issuer in the US. And it covers a number of different aspects, whether it can be yield-bearing or not yield-bearing. It can't be yield-bearing, with what it is backed by, high-quality liquid assets, who can redeem it, the timeline. It's basically sets out, if you are going to be a stablecoin issuer in the US and want to be regulated to make a Genius-compliant stablecoin, this is what you need to do. And remember, it's only just got passed. By the time they finalize the actual final rules, it'll take another 12 months, 18 months. But this was a major win because it legitimized stablecoins. Said, look, stablecoins are a legitimate, a real thing, real investable product. There's now law in the States specifically about this digital asset. And also, another interesting thing was in the US, they goes back to our central bank digital currency question. The US has made a policy decision not to issue a US central bank digital currency in favor. They said, I think this was Besant, who's their treasury guy, said that dollar dominance will be proliferated through US dollar stablecoins. So stablecoins are the proxy now for a US dollar central bank digital currency.
So correct me if I'm wrong here, but the main difference between a CBDC and a stablecoin, because they are both digital, they are both sitting on the blockchain network. They are both basically crypto.
Yeah.
But the main difference is this is issued by a country, by a government, by a central bank, and this is issued by a company.
Yep.
Right. So me as a treasurer, or me as a bank, me as a corporate, why would I go for a currency that is issued and backed by a private company or a corporate, and not go with the central bank backed and the government backed one? And this falls onto the question, why did the US did this, what you just mentioned? Where is the sense in that?
So it's a good question. So the reason people trust a government, or the reason you trust a currency, why do you trust a currency? Because you trust the government behind that currency. That's why the currency is the currency. So the best expression of a digital currency is one that's issued by the government of that currency. Of course, that makes sense. But a stable coin, which is backed by, so let's throw this back to you. There'll be an example where I'm certain you will have stable coins in the future that are backed by central bank digital currencies of that currency. I think this is actually the safest way. A stablecoin is better for the last mile. It is a more nimble product because it's a private product. Technology always moves quicker in the private sector than the public sector. So even before we talk about issues of potentially privacy, is the government checking what I'm doing? Is it allowing me not to buy, tickets to go to Yas Waterworld, whether it's actually I should be spending it on food? The control aspect of money that is governed by your government is one thing. Second is the technology. They have to pick a blockchain. They have to make sure it's reliable. The private sector is much quicker at iterating, innovating, and serving the last mile. So that's why I think people will have stable coins rather than CBDCs. But a treasurer has to make a decision, and it's something we discussed earlier. Would you have a central bank digital currency from Argentina? or Lebanon, for example, or would you have a privately issued stablecoin that's dollar denominated? I think we both know the answer here. You probably take your chance with the dollar private stablecoin, because in somewhere like Argentina, where the inflation is 10% per month, your money is devaluing. Does it matter that it's issued by a government? If the market's faith in that currency and that government is devaluing by 10% a month, then actually you'd rather from a treasurer's perspective in capital preservation, a treasurer's job is risk management. You're there to make sure you process payments. You're there to make sure that you protect the capital of the business. You're there also your third aspect is probably to give a return on the spare money that you have. A central bank digital currency in a country that has a devaluing currency is not going to be as good as a dollar stable coin in something that is issued by a private company.
This just gave me a thought there, which I'm not sure is correct or not. Maybe you can tell me. So, is the private stable coins more borderless than the CBDC? So, if I'm a government, maybe I'm not the best government in the world, and I issue a CBDC, maybe I would put some restrictions on where you can spend the CBDC. While if you have a private entity, a private company from the US or from UK or from the UAE, a well-known private company, well-regulated, well-trusted, they issue a stable coin that is borderless. It's not controlled by government. Would that also play an aspect there?
Yes, absolutely. I mean, that sort of goes back to the decentralized thesis of crypto in the first place, wasn't it? That was money without borders. Bitcoin was a reaction to the financial crisis, and it was, I want to move money without having to use intermediaries. That was the point of crypto. So, of course, with the proliferation of digital money, stablecoins, and so on, we've gone back to fiat money, but digital expressions of fiat money. But still, we have in crypto, in a stablecoin is ultimately a bearer instrument. It's like cash. I'm moving it to you. It moves like this. But it has the advantage of transparency because you can see the wallet, you can see the activity. It's on the blockchain. So you have all the benefits of a bearer instrument, something that can just be moved and has cross borders very, very quickly. But you have all the advantages actually of transparency. One of the criticisms generally, or critiques of stablecoins and critiques of crypto in general, is that it's used for illicit activity, money laundering, etc., etc. That's the same in banks, by the way. If you Google banks and AML failures, you'll see that all of the top banks have all been fined a lot of money for AML failures. With digital technology now, blockchain technology, you can monitor a lot of these things. We have transaction monitoring in my business where we do KYC, KYT, know your transaction, but know your wallet as well. So you can track activity, much, much better than tracking cash. If I gave you 500 dirhams, we don't know where it's going, if with its 500 USDC or something, we can see where that heads. So, I would say that private money is borderless. Private money can move quickly. That is the advantage, that you can move money within borders quickly. It has its natural consequences, which is that can that disrupt regional capital controls? Yes, of course it can. It can have an issue. Does it have a negative impact potentially on weaker currencies? Do you get effectively at the moment dollarization because everyone wants dollars of your country? Do we get to a situation where Zimbabwe has like a very devalued currency and people are using it for bookmarks rather than to pay money? Potentially. But these are those are not the problems of the stablecoin. That's the economic environment that people are working in. And, to bring it back to treasurers, a treasurer is about risk management. A treasury job is about risk management. So you want to make sure a lot of treasurers, particularly ones in the Middle East that have to deal with multinational organizations. They manage treasuries in multiple continents. They've got money that needs to originate from Africa or LATAM or Asia back and forth using the banking system. They find themselves having to pre-fund money in a lot of institutions, fractional banking, by the way. So these are banking institutions that may not be fully reserved, just in case their business needs them to move money. Yeah. Whereas with a stablecoin, incorporating stablecoins, it's just in time, not just in case. It's a very different concept. You shrink the amount of risk that you have in terms of these corridors. And again, it's not a silver bullet. This is a tool that is going to be an additional complement to anyone working in treasury. It's something that if you're moving money in the first world, US, UK, UAE, US, UAE, Europe, correspondent banking's fine. The SWIFT system works very, very efficiently. Corridors where it doesn't work efficiently, this is where maybe the stablecoin is useful. But as we've said, part of the role is education. We need to educate people, make sure that, and also crypto has a job to do in making it easier to use. The UI, UX situation is not easy. So trying to get people to move from a treasurer to understand an account-based economy, account-based treasury management, to wallets, understanding the wallet, the first thing, understanding how do we integrate digital money inside the treasury management system, the SAP or the FIS or the other system that they're using. How do you make sure that it can see? You don't want to run a fiat treasury and a crypto treasury. You want it to be in the same place. So these are the things that the industry needs to improve. The regulatory clarity needs to be there. The trustworthy actors need to be there. There are a few things that all have to culminate so that the treasurer has the comfort he needs to engage in this product. The recipient and the merchant need to have, and the vendors also need to be on the same system. It's no point if one leg is on chain and the other leg is not on chain. So there's so many things that we need to do, and we're right at the beginning of this journey. But through the associations, through the hard work of yourself and other people in this ecosystem, we can bring the people with us.
That's what I'm hoping for, and I had the same discussion with Nick before. I think this is the main reason we're doing what we're doing now. To put the knowledge out there, to put the education out there, and let treasurers and corporates know that there are solutions that can help you optimize your operations, make life easier, and we then hope for the best. But what I'm seeing you doing, having the association, is even a step further. You're even harmonizing everyone, you're connecting everyone and make it more clearer and simpler for treasurers and bankers to work with it. So I love it, and I commend you for that.
Thank
you. It was a pleasure having you, Ramy. Thanks for being here. I really, really appreciate it, and I've learned a lot today. Thank you.
Thank you. Shukran.